Why is everyone suddenly talking about gold? It seems like everywhere you look, on the news, in financial reports, even in everyday conversations, gold is at the center of attention. But what's really behind this global fascination? Why are people from all walks of life, from seasoned investors to ordinary families, suddenly so interested in this ancient metal? It's not just about jewelry. Gold has always been a symbol of wealth and stability. For centuries, civilizations have treasured gold, not only for its beauty but for its ability to hold value when everything else seems uncertain. In times of crisis, gold has been the go-to asset, a safe haven that people trust when currencies and markets are in turmoil. Right now, gold prices are surging, grabbing attention across the globe. The numbers are climbing to levels we haven't seen in years, and this dramatic rise is making headlines everywhere. Investors are watching closely, and even those who never thought about gold before are starting to take notice. This isn't a minor blip. It's a major rally that could reshape the financial landscape. Experts are calling it one of the most significant gold booms of the decade, and the ripple effects are being felt in markets around the world. The surge is sparking debates among analysts, traders, and policymakers alike. What's fueling this excitement? It's a mix of economic uncertainty, central bank moves, and investors seeking safety. With inflation fears, geopolitical tensions, and unpredictable markets, people are looking for something solid to rely on. Central banks are buying up gold, and headlines are filled with stories of record-breaking purchases and shifting reserves. When markets get shaky, people turn to gold as a trusted store of value. It's a tradition that spans generations. When confidence in stocks or currencies wavers, gold becomes the fallback. Investors are moving their money into gold, and even regular savers are considering adding a little gold to their portfolios for peace of mind. This trend isn't just for Wall Street insiders. It affects everyone, from your savings to government decisions. Families are rethinking how they protect their wealth, and governments are adjusting their strategies to account for gold's rising influence. The choices made today could impact financial security for years to come. Understanding gold's rise helps you make sense of today's economy. It's not just about numbers on a chart. It's about the forces shaping our world, from inflation and interest rates to global politics and personal finance. Knowing why gold matters can help you navigate uncertain times with more confidence. In this video, we'll break down why gold is climbing, who's driving the surge, and what it could mean for the future. We'll look at the key players, from miners and central banks to everyday investors, and explore the trends that could shape the next chapter in gold's story. Whether you're an investor or just curious, this is your guide to gold's incredible ascent. We'll give you the insights you need to understand what's happening, why it matters, and how it could affect your own financial decisions in the months ahead. The story of gold is unfolding right now, and it's more relevant than ever as we head into 2025. So, whether you're watching from the sidelines or considering your next move, let's dive in and discover what's really driving the world's renewed obsession with gold. Let's look at the numbers and see just how remarkable this moment is for gold. The precious metal has always been a barometer for economic uncertainty, but what we're witnessing now is truly historic. Investors, analysts, and even casual market watchers are all turning their attention to gold's meteoric rise. As of September 8, 2025, gold is trading at a record $3,611 per troy ounce. This isn't just another milestone, it's a new all-time high that's sending ripples through global markets. The price surge is being closely tracked by everyone from Wall Street to small investors. That's up 36% just this year, outpacing most stock markets by a wide margin. While equities have seen modest gains, gold's performance has left them in the dust, making it the standout asset of 2025 so far. To put this in perspective, a year ago, gold was trading at $2,490. Back then, many thought the price had already peaked, but the market had other plans. That's a 45% jump in 12 months, a staggering increase that few predicted. This kind of year-over-year growth is rare for any asset, let alone one as established as gold. Gold futures opened even higher this week, signaling strong confidence from professional traders. The futures market is often a window into investor sentiment, and right now that sentiment is overwhelmingly bullish. These aren't small moves. These are record-setting gains that have everyone watching. The excitement is palpable, with newsrooms and trading floors abuzz with speculation about where gold could go next. Analysts are now predicting gold could hit $3,615 very soon, based on current momentum. Some even believe that if current trends continue, we could see gold break through even higher psychological barriers in the coming weeks. The market's appetite for gold is growing, with each new high setting the stage for more. Investors are pouring in, hoping to ride the wave, and every uptick seems to attract even more attention. The question isn't if gold will rise, but how high it can go. Speculation is rampant, and the debate is heating up among experts about just how far this rally can extend. Every uptick is fueling more interest and bold predictions. The momentum is feeding on itself, creating a feedback loop of optimism and investment. The energy in the market is undeniable. From seasoned traders to new investors, everyone wants a piece of the action, and the atmosphere is electric. Gold's rally is making headlines for a reason. It's not just about price, it's about what gold represents in times of uncertainty and change. As we dig deeper, let's see what's driving this surge and why so many believe the gold story is far from over. In finance, certain price points become psychological battlegrounds. For gold, that number is $3,613 per ounce, a key resistance level. If gold breaks and closes above this, it could trigger a new wave of buying. Automated trading systems and human investors alike watch these levels closely. Surpassing $3,613 would confirm the bullish trend and open the door to even higher targets. The next milestones? $3,650 and then $3,700. But first, all eyes are on $3,613. It's the gateway to gold's next big move. The market is tense, with buyers and sellers battling at this critical point. Breaking through could set off another surge. One of the biggest drivers for gold right now is the Federal Reserve's interest rate policy. The decisions made by the Fed don't just impact banks and borrowers, they ripple through the entire financial system, influencing everything from mortgage rates to the price of gold. When the Fed signals a change, markets around the world pay close attention, and gold investors are no exception. When the Fed cuts rates, gold becomes more attractive because it doesn't pay interest, so the opportunity cost drops. Investors who might otherwise keep their money in savings accounts or bonds start to look for alternatives, and gold stands out as a safe haven. Lower rates mean less incentive to hold cash, making gold's appeal even stronger. Right now, the market is almost certain the Fed will cut rates at its next meeting. Traders and analysts are watching every economic indicator, from inflation numbers to employment data, to predict the Fed's next move. This anticipation creates a buzz in the gold market, as investors try to get ahead of the curve. Weak job data and slowing growth are fueling these expectations. When the economy shows signs of cooling, the Fed is more likely to lower rates to stimulate activity. This, in turn, boosts gold's prospects as a defensive asset. Lower rates also weaken the US dollar, making gold cheaper for international buyers. As the dollar loses strength, gold becomes more affordable in other currencies, increasing global demand and pushing prices higher. Investors aren't waiting. They're buying gold now to get ahead of the Fed's move. Many see gold as a hedge against uncertainty, and with rate cuts on the horizon, they're eager to lock in their positions before prices climb even further. This anticipation is a major force behind the current rally. The mere expectation of lower rates is enough to send gold prices soaring as traders and investors position themselves for what's to come. Rate cuts mean less return from cash and bonds, so gold shines brighter. With yields dropping, traditional safe assets become less attractive, and gold's status as a store of value becomes even more important for portfolios seeking stability. The Fed's decision is the engine driving gold's momentum. Every statement, press conference, and policy update from the central bank can send ripples through the gold market, influencing prices in real time. Everyone's watching for the official announcement, knowing that whatever the Fed decides will set the tone for gold's next big move. Gold is more than an investment. It's a safe haven in turbulent times. When economic or political uncertainty rises, investors flock to gold for security. Right now, global growth is slowing, US debt is soaring, and political tensions are high. Gold's value isn't tied to any one government, making it a global anchor. That's why, in times of crisis, gold prices almost always rise. Investors are trading potential stock gains for the safety of gold. Demand is surging as people seek protection from volatility. Gold doesn't pay interest, but it offers peace of mind. This role as a safe harbor is a key reason for gold's strong performance. In uncertain times, gold's appeal only grows. Central banks are now major buyers of gold, shifting away from U.S. Treasury bonds. For the first time since 1996, they hold more gold than treasuries as a share of reserves. Gold now makes up about 20% of global central bank reserves, more than the euro. This move is about diversifying away from the U.S. dollar and boosting financial security. Central banks are long-term, strategic buyers, creating a strong floor for gold prices. Their steady demand absorbs selling pressure and supports the rally. When the world's biggest financial institutions buy gold, it sends a powerful signal. Gold's role in the global monetary system is only growing. It's not just central banks. Big investors like hedge funds and ETFs are piling into gold. Gold ETFs hit a 2-year high in holdings, up over 12% this year. This surge shows both institutions and individuals are adding gold to their portfolios. Futures market data reveals hedge funds are increasing their bullish bets. Every dip in price is met with aggressive buying, keeping gold's momentum strong. Key support levels are holding firm thanks to this demand. The smart money is backing gold's rally. Following their lead, the bullish trend looks set to continue. So how high could gold go? Analysts see the rally continuing. If momentum holds, gold could reach $3,670 by October and $3,700 by year-end. Major banks like Goldman Sachs back these targets, citing Fed cuts and strong demand. If the economy worsens, gold could surge to $3,880 or higher as investors seek safety. In extreme scenarios, if confidence in U.S. Treasuries falters, gold could even approach $5,000. These aren't guarantees, but they show gold's explosive potential in a crisis. For long-term investors, gold is financial insurance. The worse the storm, the more valuable the shelter. What does all this mean for you? Gold's rise reflects global anxiety and shifting strategies. It's a signal to pay attention to your finances and consider diversification. Gold often moves opposite to stocks, cushioning your portfolio in downturns. You don't need to be wealthy. ETFs and other options make gold accessible. The key is not chasing quick gains, but building resilience. Gold's story in 2025 is a reminder. Stay informed, diversify, and prepare for uncertainty. Understanding gold's role today helps you make smarter choices for tomorrow.